Rise and shine. Starting off your day with good vibes and great music.
The greatest hits.
This is the Morning Fix with Tabby Minor
on Radio 44.
All right, it's 8 o'clock. We're into the second hour of the Morning Fix here on Radio 44, your music, your life. You're on with me, Tabby. And you know what? The day's energy is giving. It's time to secure your future and that of your next generation, courtesy of Ndovu Wealth, which of course we've been saying is the ideal product designed for your long-term, serious, diversified wealth building thinking. And of course, it's CMA regulated. Now, that product, the Kibaba Multi-Asset Fund, which we've been talking about for the past few weeks, we'll be able to get into it. We've been saying there's the expected return is 20% in Kenya shillings, 18% in USD. What does that mean? I will be chatting with the CEO and co-founder Ndovu Wealth, Radhika Bhachu. She's in studio, and of course, she's been in the game for a while. Then she will be having those insights. You want to stand by, of course, for all of that and great music. You have those questions about building wealth? The time is now. Get them through. You can send them in via WhatsApp 0758123444. But of course, the conversation is about securing your future. We've been saying you need your money to work for you. What does that mean? We'll get into that in a bit. Starting us off, Amal Malik, of course, with this jam on the Morning Fix with me, Tabby. Good morning. Amal Malik coming through for you 7 minutes after 8. It is Tabby on the Morning Fix, and I'm not alone. I'm joined by CEO and co-founder Ndovu Wealth. We need to be serious about the conversation of building wealth. I don't think we're serious enough as a country, and you know what? It's about time we had this conversation. And even more than that, we've decided to introduce a new segment here, and it's called Millionaire Mindset, and it's about changing how we think about building wealth. And of course, you would be the ideal person to have this conversation with. Welcome to the Radio 44.
Thank you, Tabby. Thank you for having me.
Yeah, have you been to a radio station before?
I have indeed.
But not here?
Not here.
Why?
Well, I'm here now.
Welcome, for sure. So we're talking about this millionaire mindset. And I'd like to know from you, from a professional point of view. I mean, you do have years of experience, you're handling people's wealth. So what does it click for you when we say millionaire mindset? Who has this millionaire mindset?
Yeah, I think the millionaire mindset has so many different meanings in today's age. So if you look at social media, normally the millionaire mindset is the 5 a.m. club, it's the private jet, the extravagant lifestyle.
That's ideally. But
that's actually not reality. And the millionaire mindset is a lot less boring, and it's more about trying to understand what is my money doing for me. So in my perception, the millionaire mindset is about thinking, how am I working every single shilling I have in my bank account? Whether that is thinking about how do I protect it, how am I growing it, and is it working towards something special or a specific goal that you have? And I think the second thing about having a millionaire mindset is that you have to be patient. Rome wasn't built in a day, and great portfolios and investment portfolios are built with time and being invested in the market, and not chasing every new thing that comes onto your radar due to social media. And I think that's what the millionaire mindset is. It's less exciting than social media and the newest trends, but you need to be thinking like a business about your personal portfolio, but also committing for the long term so it can actually do its magic.
Do you think this millionaire mindset is for everyone? Or is it for a certain type of person who is at a certain point of life?
I actually think it's for everyone.
Yeah.
And if you look at financial literacy rates in Africa, and especially in Kenya, they're currently at 3%. And that's what is lacking. If we had more education, and it's a global problem, not just an African or a Kenyan problem, but if we had a better understanding of how does money work, what could you do to make money work for you, actually we'd all have millionaire mindsets. And I think that's something that we can figure out together, and that's why we're here.
All right. I like that introduction. I think you set the tone of how these conversations will be here on the Morning Fix. Now, let's get to what you've done and your past and your portfolio. You've handled millions and billions of money for millions of people. And I'd like to know what exactly is what is this fundamental shift in psychology of someone who's transitioning from simply, saving money at a bank and truly, truly building wealth, especially now that we're talking about Ndovu Wealth? Walk us through that fundamental shift.
Yeah, thanks, Tabby. So for me, I started my career at Deloitte as an investment consultant advising pension funds on how to take the assets that they have, invest it so they can pay out their liabilities, because these people become pensioners and then they have to pay it out. And when I was at Deloitte, I saw every single strategy possible. I then moved over to BlackRock, which is the world's largest asset manager. And there I was very much advising institutions, family offices, on how, again, to take the money they have and invest it. And I started listening to the signals of what do we need to look for? What are the little things that are important in order to grow your wealth? And actually what I recognized was that with my personal portfolio, I can deploy all of this. It's actually not, it feels complex, of course, when you're on the other side of it and you're not part of the finance world. It feels really complex, but it really isn't that much complex. And it can actually be a lot of fun when it comes to actually thinking about your wealth.
Fun.
Fun, yeah.
Wow,
no,
okay.
It's fun. So the reason I say fun is because when you start seeing your money work for you, you become addicted. So you get addicted in understanding how can I grow that dollar further. And there's some principles when it comes to investing and what you should think about. Everyone believes that they need a million shillings to get started. Actually, you can start with as little as 5,000 shillings. And what it really starts with is your mindset on, am I a consumer or am I an owner? But typically when you see, just by default, social media consumption, everyone's pushing a product to you, you end up consuming you end up spending money that you don't really need to spend to live a happier life. Yeah. But really what should really happen is that you should be looking at, okay, for every shilling I have today, what should I be putting my first initial investment in? And after that, there comes a point when you hit roughly 13 million shillings when the compounding starts to shift. So we tell all our clients at Ndovu, especially the ones who are starting off, let's build your portfolio, let's look at your expenses, let's budget, let's reduce bad debt so that you can get to a portfolio of 15 million. And in that case, what happens is that your compounding takes.
Now, with the example you've given, so you're saying that it is possible to start with 5,000 bob and building up to 13 mil.
Yes.
So is this 5,000 bob what we call the opportunity cost?
Yeah, exactly.
Because I know there's a term like that.
Yeah, yeah. So exactly that, right? So think of it like this: you go down to the bar, you go for drinks on Friday night, and you're like, yeah, I'm only spending 20K. Right? But typically our clients are more sophisticated. When we do our client meetings, they'll say, yeah, we went out for dinner and over the weekend I spent 120,000 shillings. That's an opportunity cost that could have been invested and it could be earning anywhere from 12 to 18%. But what you've done is you've drank it, you've won your money, you've traveled, you've learned the experiences, and that's all part of life, and there's a way you do that. But for those starting out today, you need to be able to say, okay, how do I invest my first 500,000 shillings so it continues to compound towards the 15 million? And the compounding effect is simply saying that when you have enough money in an investment, it earns an interest, and then that interest earns an interest, and it earns an interest. So if you think of it as a snowball going down a hill, because your money is working for you, it continues to grow. So you no longer have to work that much harder to achieve that 15 million. It just does it for you. But the unlock happens at the 15 million mark, because now earning 10% on 15 million is very different to earning 10% on 150,000 shillings. Mm-hmm. And as soon as that mindset shift happens, it's a sacrifice for 2 years, but as soon as that happens, that's when the magic comes in, and then it becomes really fun.
Right. No, that's the fun part.
Yeah.
Do you know what? We've been saying for the past few weeks about how this expected return of 20% in Kenya shillings, is that the same thing you're talking about? That once you reach a certain mark, then you start earning? And we'd also said it's 20% Kenya shillings, 18% USD. So that's what you're talking about until it gets to a certain point?
No, not at all. So for example, for the Kibaba fund, the minimum is 250,000 shillings. That 250,000 shillings immediately will start earning 20% per year. Now, if you were to look at that just more generally, that's a really good return, because that means that you're outpacing inflation, which is simply the cost of living going up. If you went down to the supermarket and you bought a Coca-Cola, you could initially, growing up, I remember I could buy it for 30 bob, and now it's at 100 bob.
Yeah.
So that's the cost of living going up, because things are generally getting more expensive. So the idea is that you want to work your money enough so that you outpace the cost of living.
Okay.
And inflation today in Kenya is at 6.4%. That's quite high. So if you're just holding your money at home under the mattress or in a bank account where you're earning less than that, that's not very attractive. So the idea is that when you invest in Kibaba, you can start earning 20%. But imagine instead of earning 20% on 250,000 shillings, you're now earning that on 15 million. That's the fund that I'm talking about, because now you don't have to work that much harder. It probably covers your holidays for the year, your basic minimum outgoing, and you actually can go to work for fun rather than having to work to pay.
I don't know who would do that if their savings look like that. Fun is relative here in this case. So I want to talk about, we've been talking about the Kibaba Multi-Asset Special Fund, which is this product that we're talking about from Ndovu. And you say it is targeted specifically for people who want to achieve their long-term goals. And then I think that we would say it is a goal-saving project, right? Or fund, right? And so I'm wondering, how would you define specific? You say you guide your clients as they come in so that they know how to work out their money, but how would you be able to define a specific target versus another business target? Say you want to build a business, but you also want to fund your children's university. How would you be able to define this, of course, to be able to help your clients as they join Ndovu Wealth?
Yeah, no, I think so. This goes down to financial planning. Financial plans are very personal to each individual, and the value that we bring at Ndovu is that we've had over 16 years. Our team ourselves has 4 decades of experience, but we bring that to you to say every single financial plan is very personal to you as an individual. And so when you first join Ndovu, we would definitely sit down with you, understand, have you figured out what an emergency plan looks like? What would happen to you should you lose your job? Do you have enough money or runway to support you for the next 3 months till you get your ducks in order? And really the idea here is that if you are investing for a long term, which is, let's say, your children's education, let's say they're 5, you've got another 14 years, or if you're investing for the short term where you need to buy a house in 3 years' time, the investment strategy very much differs. And so at Ndovu, we have various products with different types of risk profiles, time frames, targeted returns, so we can allow you to build the right suitable portfolio for you. And the beauty about the Kibaba Multi-Asset Special Fund is that it is actually a balanced portfolio. Our thesis internally is that we will deliver risk-adjusted returns, which means returns by not taking too much risk. And the idea there is that we want to ensure that your money is safe with us, but it's also doing a lot more, so you can have that growth of 20% rather than giving you a money market fund, which has a place for it in your portfolio that gives you anywhere from 10%. And so the idea is that we really do put together a bespoke solution. We have different products that fit different types of goals that you're looking for, different investment timeframes, and also your ability to take or not want to take more risk, but also to take more risk.
All right. I am in a class here. I'm trying to understand how my future can be secured as well as that of my next generation. We are here with a CEO and co-founder Ndovu Wealth, who's Radhika, and she's getting into the nitty-gritties of how to protect your future. We've discussed mindset. We've discussed the millionaire mindset, of course. And in a bit, we come back with how traditional Kenyans invest. And we've mentioned money market. So we'll get back into that. And of course, your questions are very much welcome. You can send them in on WhatsApp 07581234444. So we're able to understand, are you able to move forward? Is your future safe? Or are you risking it? Are you not having fun with your money? That's the conversation this morning here on The Morning Fix. Right now, Craig David is coming through with Walking Away. And we'll be back with this conversation, of course, featuring CEO and co-founder Ndovu Wealth, Radhika. Good morning, it's Tabby on The Morning Fix. Sononegam Sunidhi Shahan, 27 after 8. It is Tabby on the Morning Fix, and we are having a conversation with CEO and co-founder Ndovu Wealth. And we're having a conversation about how can we secure a future, right? How can your money work as hard as you do? And we've been having a conversation about so far what has been happening in the space. What does my millionaire mindset look like? And now we want to talk about the traditional Kenyan investments. Radhika, here in Kenya, if someone wants to build wealth or, think about securing the future of their country, of the children, they want to buy a plot of land and, I don't know, maybe save something and fixed deposit in the bank or something like that. Now, does that still work in this day and age for Kenyans to be able to build wealth for their future?
Yeah, so I think with land, it's really interesting. Every client we speak to has ample amount of lands in areas where it just hasn't appreciated. And then, of course, land is obviously a great holding if it's in an area where you think the value is going to go up, but majority of us actually hold it in areas that it's not going to go up. And then we like to talk about real estate. Now, of course, having a real estate allocation in your investment portfolio is attractive, especially if it's in an area where you're able to rent it and you can get a yield of anywhere from 8 to 12%. But recently we've seen an overflow and influx of apartments that are being built. So rental yields are coming down, and actually if you were to ever sell this particular asset, you have to pay capital gains tax. And then when we talk about fixed deposits, everyone thinks fixed deposits are great investments because you can see what value you're getting, and they are, but they don't compound.
Like the lands and the buildings?
No. Also lands and buildings are also great to hold in your portfolio, but there has to be a balance. But with fixed deposits, everyone thinks you're making an investment, but it's not. It's a high savings bank account, and your money is not compounding. And compounding is when your money gains interest, like I mentioned earlier, and it keeps growing for you. And so fixed income has been fixed deposits, have been a huge part of a lot of Kenyans' portfolios. And this type of investing, land, real estate, and fixed income, worked really well for our parents' generation, right? So that was the first step of saying, okay, we need to become better at saving. We need to become better at buying more investments like land. But in today's day and age, where the cost of living has gone up so much and land values are not appreciating the way we wanted, what we are seeing is that a lot of clients who need short-term liquidity end up taking the parcel of land's title deed and saying, hey, to a bank, can you please put it as a fixed, as an asset, and can I borrow against it? Which means that you have an asset, but you're actually paying to borrow against an asset, which doesn't really make sense.
Yes, it doesn't.
Instead, you're better off just actually making an investment in a money market fund, in gold, in a multi-asset special fund, because in that sense, your money is working for you rather than going to a bank.
So this is what you tell your clients when they come and they tell you, I have property and I have fixed deposit and I'm good. My future is good. That's what you tell them?
Yeah, that's exactly what I tell them. And what I say to them is that let's diversify your investments. We're not saying land is not a good investment. There's a place for everything in your investment portfolio, but let's think about something else that is growing. And so there has been, and we've seen this in our clients, there's been a mindset shift, and the average African Kenyan is becoming a lot more sophisticated than you think. And you've seen that with an increase of investment in the money market space, and we'll talk about that in a second, but also recently an shift of money moving from bank deposits to special funds as well.
In fact, I even have friends who say, I'm trying to save for my future. MMF is working for me. The interest is great. It's working for me. Why is there this shift? Why are people headed towards this MMF type of investing? And what exactly what does it protect you from, or how does it secure you if you land into the MMF direction?
Yeah, so I'll say something controversial. Everyone says that an MMF is an investment, but in my world of investments, I see it as a high savings bank account. However, the ones and your friends who've started this investment, kudos, well done to them, right? They're moving in the right direction. So MMFs, if we look at the history of Kenya and investments, MMFs were the first, so MMFs stand for money market funds. They were the first type of innovation in the capital market space. They are a great allocation in your portfolio if you want money that you can access within 6 months, because by design, money market funds are capital preservation, so they protect your capital and they give you a return that is slightly higher than what you get at a bank account. So it is the first step in your investment portfolio. We have a money market fund which did 11%. It was a top 3 performing fund last year, and that's great. However, money market funds are typically a simple, safe, clear pot that you can hold your money in just in case you need an emergency, but it's not working more or working harder to actually grow your wealth. And the reason being is that if you look at the Kenyan inflation rate, on average, it's about this year right now it's at 6.4%, but on average it's been anywhere between 6 and 7. So if you're earning 11%, you're only making 4% more. And that's not growth, right? You're just protecting the value of your money. But what it does, it gives a lot of people peace of mind. And what we've seen in the market is that last year, 60% of bank deposits were moving from banks into money market funds. And so there's been a lot of education, and that has been the craze. And now I urge for your friends and everyone else to now think about what is the next step in the investment journey.
All right. You did mention a couple of percentages there, and that's why I'm curious, because for a normal Kenyan who's trying to grow their money, maybe the money they've saved somewhere, how would they be able to calculate the real return of what they're saving to find out if they're actually gaining the purchasing power or they are just missing it? How would an actual listener or a Kenyan trying to build a local savings, how can they calculate their real returns?
Yeah, so I'll use the Kibaba fund as an example. So we're saying the expected return for a Kibaba fund is 20%. Okay, great. But if my money is growing by 20%, we have this thing called inflation. It's eating away. So let's take away 6% on average. So that means out of the 20%, you have 14% that your money has actually increased. Now, of course, our return on the Kibaba fund is net of fee and net of tax. So that is what you actually take home. But if you have other investments that you are using where you still need to account for fees and taxes, then actually the money that you take in your pocket is a lot less. So it's
less than 14%.
No. So the Kibaba fund is net of fees, net of tax. That's the return. It's 14%. Okay. Now, if you compare that to a money market fund, what you actually take home is 3 to 4%. So you can see that you're leaving quite a lot of money on the table by simply not taking one smarter move of moving to a multi-asset fund. But in other investments, such as obviously real estate income, if you've got a rental property, you need to also include inflation, the expenses, the money that you've spent fixing up the place, council tax, etc., in order to really understand what you take home.
All right. This is a conversation about you, who's a Kenyan, who's used to putting money in that bank, and you're thinking it's working for you. No, it isn't. And I mean, Radhika has been able to clarify why it isn't and why you need to start thinking about investments in something like the Kibaba Multi-Asset Special Fund by Ndovu Wealth. Now, you've just mentioned that people are moving money from banks to MMFs, really. But also, what exactly is this? What would you say is this smart money doing right now in terms of that average retail investor who hasn't caught onto moving money, right? So what would you say what exactly is smart money doing right now in this for this retail investor?
Yeah, so smart money is always about thinking about what am I doing to protect my portfolio, but also what am I doing to grow my money. And so we call it the offense and the defense strategy. In the long term, defense always works well because you want to make sure the capital you have is protected in different ways. And then offense is where you really make a dent in your change in your lifestyle by really taking the right decision. So at the moment, the way I see smart money is that they are typically looking at having a 6 months runway, so 6 months expenses in a money market fund because you know it is capital protected, you know you can count on it should anything happen. They're not putting their entire life savings into money market funds as what we're seeing at the moment. And the next thing is to say, how do I diversify my portfolio smarter in an asset that is more liquid and I still can draw upon it should I have an emergency but is earning more? And that's where a multi-asset special fund comes into play, investing in gold. So on Ndovu, in addition to the Kibaba fund, we have a bunch of other investment products that give you more global exposure. So this smart money is not just investing in Kenya shillings, they're investing in USD to protect from the weakening of the Kenya shilling as well. And it's always great to diversify your income streams, your asset classes, your investment opportunities. And also smart money now understands that if you were to invest in real estate and you sold the land, you're paying 30% capital gains tax. But in Kenya, there's regulations that say that when you invest in money market funds, special funds, there's no capital gains tax because you do a final tax at fund level. So smart money is also thinking about how do I get impacted by tax as well.
Do you think people, while they're trying to just make their money work for them, do you think people know about these laws that you're mentioning? Do you think how is it possible for me to just know all these things and be able to just start investing straight up? Because it's not talked about much, right?
Yeah, it's not actually. It's actually one of the. So, we talk about enabling governments and enabling policy to help people grow their wealth. Actually, this is an enabling policy of what I just mentioned, that there's no capital gains on capital markets, but it's not talked about, which blows my mind, because if you were in another country, they'd say, we are encouraging people to invest in the capital markets because it drives local growth as well, because you're getting private sector money, helping build public companies. For example, if you were to invest in the top 6 shares on the NSE, they're able to raise more capital, go and deploy that capital, generate more returns, and you're building your country. But for some reason, it's not spoke about here. But I think the best thing you could do is to learn more about investments in the space is actually just reach out to one of our relationship managers or financial advisors, and we'll walk you step by step. But you're right, it's not readily available, and it's something that you do have to fish. So it seems a bit daunting because everybody who doesn't work in finance already thinks it's complex, but come to us and we'll simplify it for you.
And you know what that has reminded me of is that, yesterday was a deadline for taxes, and equally as people don't know what they need to do. They don't know about the laws, and I don't know who is supposed to fill that gap. But what I did notice is that Ndovu Wealth's Instagram, you show up a lot and share a lot of content, and I appreciate that. I think that's a way we can be able to share information about the laws and how you can save. Now, we've been able to get into what Kenyans have been doing in the couple of years in terms of being able to secure their wealth. Now, we're coming into this fund we've been talking about for the past few weeks, the Kibaba Multi-Asset Special Fund. We'll understand what exactly is it that is interesting enough for you who's listening to be able to board, and of course to be able to understand also what tech is Ndovu Wealth using to be able to help Kenyans invest smarter. All of that is coming in. I'm seeing your interactions on WhatsApp. I appreciate that. We'll get into those conversations, but right now we need to get into the world of sports coming through for you right about now. It is 39 after, of course, 8. We will be coming through again with Radhika. She's not going anywhere, but right now let's get into the world of sports. It's an absolute banger coming through for you. 14 minutes to 9 in the morning. And this morning we're having a conversation about how to secure your future. Make sure your money is working for you. And I am joined in studio by Radhika Bhachu, CEO, co-founder of course, Ndovu Wealth. She has experience as a former portfolio manager, BlackRock, and a strategist who understands the mechanics of money. Now, if you've been listening the past few weeks, we've been talking about this product, the Kibaba Multi-Asset Special Fund by Ndovu Wealth. And we want to know what is the advantage of course, being able to invest in this. Now, Radhika, how does the Kibaba Multi-Asset Special Fund, how does it differ from the standard MMF? And of course, how does it also generate what we can allow, or rather to allow let me rephrase that. How does this Kibaba Multi-Asset Special Fund differ from the normal MMFs, and what allows it to outperform the local interest rates?
Yeah, no, thanks. So the money market funds, the MMFs, have a simple investment strategy. They're only allowed to hold short-term investment government bonds, so such as treasury bills or fixed deposit call deposits. And because they're limited to a small pool of investments, their return that they can generate is lower. And with the multi-asset special fund, it means that because it's multi-asset, it can hold investments such as gold, copper, silver, bonds, local bonds, global equities. So you can also hold investments in the largest 500 companies globally. You can also hold investments in alternative assets, and they're all held in one fund and one structure. And what that allows the fund to do is that because you've got investments in different types of areas, you're diversifying your eggs. So you're not having all your eggs in just cash-like instruments like the money market fund. You're actually having them in different asset classes, which means that if one asset class doesn't do well, so let's say the equity market comes down, you know that gold will go up. And so it is your portfolio manager's responsibility to look at the signs in the markets to say they have the professional expertise, they have vast amounts of data to say, okay, which asset class within this multi-asset fund do I think is going to do well, and how do I allocate your money in order to be able to generate a superior return to a money market fund. So the real difference here is that it's a professionally managed fund by a portfolio manager who is working 24 hours around the clock to make sure they're making the right investment decisions across various asset classes so they can deliver double-digit returns.
Does someone choose what assets to invest in terms of like gold, the commodities, or is it something you advise your clients? How does that work?
So actually, for the Kibaba Special Fund, it's actually managed by the portfolio. We give you an outline of what we will hold, but it is ultimately our decision on where we put the money because we're the experts behind investing.
100%. Now, you did talk about investing globally, and sometimes to a normal, ordinary Kenyan, that could sound like it's the thing that politicians do, the thing that the rich do. That is not our thing. So I want to know how Ndovu is using technology to allow everyday Kenyans to be able to invest in this that we're saying a global investment journey. So what technology are you using for Kenyans to be able to invest in this, of course, even and make it easier even for them as they continue the journey of investing with Ndovu?
Yeah, so Tabby, before that, I just want to mention why it's important for us to invest also in Kenya shillings and US dollar. If you look at us as Kenyans, everything we buy is pegged to the dollar, whether it's your phone, your iPad, your laptop, your travel, but actually we earn in Kenya shillings. And as you know, over the last 5 years, our currency has weakened against the dollar, which means if I wanted to buy the same laptop at the same price, if I bought it 5 years ago, I now have to spend more money, on average 30% more, to buy the same laptop of the same value because our local currency has depreciated. And that's why it is important that we're already at a disadvantage because we earn in Kenya shillings. Our investments should also be earning in US dollars so we can close the gap between that disadvantage. And the way historically before Ndovu, it was really difficult for the everyday Kenyan to be able to invest in global markets. Using technology, using our app, we make it simple for our customers to hold the S&P 500, the gold fund, the technology fund. Everyone's talking about AI and quantum computing. In addition to the Kibaba fund, we have other products on our platform which you can invest using sitting at home in the comfort of your home, and we manage all the back-end operations. So how does your money move from Kenya to the US? We manage that. How do we reflect the return? And it's all done digitally because today with technology you can really break down barriers, and we were the first company in Kenya to allow that to happen. And since then we've helped serve over 200,000 clients within those funds, and they last year generated an average return of 28% on the dollar. So what does that mean? That means that our customers, their financial portfolio well-being has grown by 28% on the dollar last year.
All right. I like that you've mentioned how it works with investments in, of course, USD against Kenya shillings. So I'd like perhaps to this person who is a parent with children going to campus in 2 years, and they're thinking, I need to have that sorted out. And maybe they're also at a point in their time where they are building back home or building for their family. Perhaps speak to this person about why this Kibaba Ndovu Wealth, or rather multi-asset special fund, would work for them, and how that process would be like if they are to make that call today or even sign up on ndovu.co.
Yeah, no, perfect. So first of all, if you have children who are younger, you should start investing for them the minute they are born. And
that's soon?
That's soon, yeah. Wow. So we can share some data with you, but if you invested on average over the year about 1 million shillings for your child at the age of 0, so year 1, by the time they come to 24, they will have 500 million shillings in their portfolio. And you've definitely not put in 500 million shillings. The market has done its magic and it's compounded. And if you were to hold that same money in a bank account, it sort of sits at around 150 to 200 million, depending on the savings product you have. Okay. So that is the difference between investing and saving. But for the person looking to save for the children's account, how that would work is that you could either download the app on Apple or iOS, on Android or iOS, and you can also just go onto our website and set up an account. when the account is set up, we have your details. A relationship manager will be in touch with you. But on the app, you can clearly see the Kibaba multi-asset fund. You can click onto the fund. It gives you the details, what the expected return is, what currency it is in, and you can use M-Pesa or bank transfer to make your first investment. Within 3 days, you'll then see your investment on your account. It's like an online banking account and app. And the beauty about our special fund is that we're very transparent. You will see how your money is growing on a quarterly basis, but when you wake up, you can see your money. When you go to bed, you can see your money. And the reason this is important is if we just tie back the conversation to psychology, when we're humans who like instant gratification. So when you see your money growing, you're more motivated to make regular investments. And so our investment app gives you the opportunity to see and track your money so that you could then make better life decisions rather than spending 50,000 shillings on a weekend. You're like, yeah, great, I'll spend 20 and I'll invest the rest because I know I'm making 20% here.
Well, according to Radhika, she's just saying, as you're enjoying your weekends and your holidays and family time and the World Cup, you need not spend all of that money. You need to think investment. Now, I want you to also speak to the listener if they are trying to also restructure how their wealth is moving. What would be the blueprint for the ideal portfolio split? Now, this is to someone who's trying to restructure their wealth, and maybe perhaps you could tell them how much should sit in the MMFs and for emergencies and for the long-term growth. Maybe help them restructure their wealth.
Yeah. So of course, the money market fund is your emergency fund, and you should have your 6 months of expenses in that particular fund. So let's just take an average family. I'll just use average market data. A family of 4, typically, depending on where you live, what school your children go to, you would need on average a monthly income of 300,000 shillings. And so 300 times 6, you need to have that particular cash in a money market fund that is earning more than a bank account and just preserving your capital and outpacing inflation. And what that means is that if there's an emergency, you can draw upon that cash. People can sometimes use fixed deposits. I actually think money market funds are better for that allocation. And then, of course, I would break down your financials into 2 goals, medium term and long term. In your medium term, it is really important to be having assets that, so medium term is a time frame of anything between 2 to 5 years time. And in that one, the Kibaba Multi-Asset Fund is a great product because it's managed by a professional, and we invest your money in such a way that your capital is protected, but you're achieving high growth, and it still generates around 20%. And of course, you want to build on that medium term, so you can use that to build a house, pay for someone's school education, etc. And then you have your long term, which is anything between 5 to 15 years. A lot of people don't like thinking about long term. They're like, oh, it feels such a long time away. But if you look at this year, we're in the middle of the year. Time
We're literally in the next half.
Yeah, time flies. And so if you don't need the money within that long term, I would couple that with the multi-asset special fund, but additional, the S&P 500, the quantum computing fund we have, because these funds have a little bit more volatility. It means they go up and down, but the returns are very strong. I know because of where AI is today, and everyone's talking about it, the machine learning, which is a quantum computing fund on Ndovu, just to give you an example, year to date it has done 45% on the dollar.
Right.
And those are crazy returns. They sound really big, but actually there's a place for it in your portfolio. And the value that Ndovu provides is give us a call, drop us a line. We will help you build your short-term, medium-term and long-term portfolio.
And that's the thing, not many of us plan our future like that, 5 years and then 10 years. No, we don't do that. Some of us actually just trying to survive a day. But here's the thing, you need to be keen about how your future is going to look like, as well as that of your future generation. That's why we have Radhika Bhachu having this conversation with us here in studio. Now she's going to come and tell us exactly the steps we need to take to be able to evaluate risk and build wealth. So don't you touch that dial. It is almost 9 in the morning, but right now, got to love you some Diljit Dosanjh this morning. Now, we are still in studio with CEO, co-founder of Ndovu Wealth, Radhika, and she's telling us why you need to secure your future immediately, especially if you're thinking long-term. If you have a generation coming after you, what do you need to do to be able to ensure that your future generation is also quite okay and you're building wealth and your money's working as equally as hard as you do? Perhaps, Radhika, we could get into the details of how walk me through signing in and for this product. Maybe how would you be able to establish also if I'm say 25 and someone else is 35 or 45, how would you know this is what works out of the products that you have? And maybe walk me through getting into this investment platform and how that would work out for me, perhaps in what, a year or two?
Yeah, no, sure
Let's
thing.
go.
So, of course, I mean, you're driving right now, so don't just try and restructure your portfolio in the car. Like, that's not the point of this. But the point is for you to be aware that you can go on Ndovu app. So if you go onto the app stores and search Ndovu Save and Invest, it's a yellow icon, an orange icon that comes up with an elephant. Or you can go to www.ndovu.co and you can sign up. Now, when you sign up, there will be a quick questionnaire that takes less than 10 seconds to complete. And one of our relationship managers will actually give you a call as a result of that financial advisor that then has that information to give you guidance, whether you're 25 or 35, and really help you structure the portfolio for you. And essentially what you would expect to see is that within a year or so, your portfolio is going to be, depending on the product you pick, up anywhere from 11 to 35%. And the beauty is that you can see everything. You can see your portfolio value, how much you put in, how much your money has grown, if you've taken money out, and also we will then hold your hand and guide you on how you can get to your next financial goal, which at the early of this conversation I said that the magic number really is 15 million shillings in an investment account. And so whether you're starting small or big, and we have clients from all different income segments, whether you're starting small or big, we will help you get to your next financial goal.
And I did love the idea that you guys have an app and you can be able to track, as someone who's investing with Ndovu Wealth, you can track your investment and how that is building up. And so if I want to sign up today, are there documents that you need me to come with or attach on the questionnaire? How does that work? What do you need from me who's interested in this?
So of course we have business accounts, individual accounts, and Chama group accounts. So depending on what account you're opening, typically the basic information we need to verify your identity is your national ID or passport, your KRA PIN, and your address, and we also ask for next of kin information. And the beauty about being digital is that you can complete that process within 3 minutes and be approved instantly. But of course, if you're slightly older and would like to just send us your information, we can also set up your account on the back end.
All right, Radhika, if you went back to, I mean, you look pretty young, so I'll probably put you at early 30s. 40s, maybe. Maybe. Yeah. However, if you went back to 25 years old and you've just gotten into, maybe you're 2 years into the job market and you're thinking, okay, this bank saving is not working for me and I need to think about my future, right? What would you get into? What is the mindset you'd get into this space with? How would you convince yourself that this is not a thing for people who have 15 million? You know, it's for me who wants to secure my future. What is the mindset you'd walk into this with?
So I'll use a personal example. I started earning when I was 16. I'm actually closer to 40 now.
Right.
But I only started investing at 24. And of course, the reason I started investing at 24 is because I went into the finance field, so I very much understood the market. But if I was 24 today, I would say to myself, take the leap. You can learn and listen and get advice, but until you don't do it yourself and you actually see the benefits of it, you're not going to know what it means. And I will tell you one thing, if I had started investing at 16 versus when I did, I'd be a lot wealthier. And these are tools. If you pick the right fund manager, the right company, they will help you grow with you. So what I would say to you in terms of mindset is just get started.
Okay. And someone who's 60 and they feel like they've lived most of their life, I mean, there's not much they can do with that. What would you speak to this one? Because someone who's listening right now is probably 60 and thinking, do I really want to go this direction?
Yeah, I know. But I think when you become 60, depends what life position you're in, you're probably building for your grandchildren now. And so if you're building for your grandchildren, what a gift would it be to say, hey, at 60, I tried something new. I invested in capital markets. And now I want you, who's much younger to me, to also consider it. And of course, if you're 60, the investment advice we give you is very different to a 25-year-old. And this is why make sure you book that financial advisory call. These calls typically cost a lot of money, over $1,000 to book an actual expertise advice. But get that call. And even if you're in your 60s, think about what do you leave back for your family? How much could it help you, and how nice it would have been if your parents when you turn 25 said to you, hey, by the way, here's your stock portfolio that I built for you.
All right.
Yeah.
I appreciate you taking the time to come through and tell us why we need to be thinking long term and particularly investing with the Ndovu Wealth. You mentioned you're across 3 countries?
Yes, we are. So we are, just in short, we're regulated by the Capital Markets Authority of Kenya, Rwanda and Uganda as fund managers. We actually have clients from all around the world, which is beautiful, but we are regulated in those 3 markets, and so if you are listening from other markets as well, we're available to you.
All right, there we go. We have been talking for a couple of weeks now about the Kibama Multi-Asset Special Fund. If you're still not convinced why you need to be thinking long-term and start investing, I think the time is now. Radhika has done us the honor of being able to clarify what that journey looks like, what the expected returns look like. Radhika, perhaps a word for us and our listeners as we start the second half of 2026?
All I'd like to say to you is get started. It's never too late. Whether you are coming into your financial journey, whether you're at the age of 60, the beautiful thing is that investments, it's never too late to start. Compounding starts immediately, so get involved, sign up on Ndovu, and let's see how we can help you grow your wealth.
Absolutely. Thank you very much. Remember, signing up is very simple, ndovu.co, or give them a call, 0715-530-530. Get to start your global investment journey right about now, so your future is good to go, as well as that of your future generation. Thank you so much, Radhika, for coming through.
Thank you.
We wish you a fantastic year, the rest of the year. And I think you will be reporting more wins and of course, for Ndovu Wealth and this asset. All right, have yourself a great day. And we will be checking in after the 9 o'clock hour. Right now, Nikita Gandhi coming through to wrap up the hour. Good morning.
We set the tone, you set the mood. The Morning Fix with Tab.